Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with our deep dive for November 1st, 2017. Tonight I'm going to talk about kind of a rehashing of three markets that I recently did deep dives for. The first one is going to be natural gas. I want to point out in today's deep dive we have downtrends, short, intermediate, and long term. We've got a technical rating that is sort of flat and a pivot low that just triggered. So I'm going to go through these kind of quickly just to give you some perspective. Here is daily charts for natural gas. If you look at the deep dive that we did back on October 23rd, you'll see that we were talking about support here. We were at this particular level on the 23rd, if I can find it here. It was this point where we were touching the 50-day moving average, and we were discussing whether or not the market was going to break out to the upside, or with the energy, the strong energy that we saw in the market, was going to break to the downside. Well, in fact, it did break to the downside, and we just got a pivot on the elastic level. So that's a foreshadowing that the market is taking a little bit of a breather, and then when the close and the low are basically the same or exactly the same, you get a doji, a Japanese candlestick. So I just want to point out that the market has had a nice sell-off. I'm not saying that the market won't continue to the downside, but for the most part, it has in fact had a nice little sell-off here, and any of those shorts that may have been initiated based upon our talk of a breakdown or a break up when we were on at the 23rd, we've come down, and now there's a little bit of an opportunity for some short-term profit taking. So I want to point that out first. The second market we're going to take a look at is coffee. So coffee, if I can find it here, had a bit of a sell-off today where it was down almost 2%. And the reason that we're talking about that particular market, I'll come back to our deep dive, is that coffee is at a support gap and has been for a little while now. Support gap means that there's little resistance to the market continuing to sell off. And so it's not to say that it's going to get into that period and then sell off dramatically, but we're at that limbo that there's a netting below the market, and that netting is right below you, and then there is a netting that is very far away from you, and that gap between the nettings is quite dramatic in coffee. So when we are looking at coffee back on the 22nd of October, we were short the market. We're still short the market. And if we take a look at coffee inside of a TradeStation, you can see that we're still playing and toying with some support level, and this level, this little dot that is where we are right now, again, these are daily bars, that if we should break this, and we're kind of breaking it now, and have been breaking down through these support levels here, that in fact it was the 22nd, I think I said, that must have been a Sunday. Right, so from that point we were at that support, and the market has gone sideways, and we're still at that support gap. So where we are now and this lower level here is still in play. So keep in mind that our systems are short the market, and we're anticipating that with the seasonal tendencies to what the market are traditionally doing around this period of time, that would be looking for the market to really take advantage of the short position. So I'm going to encourage you to go back to the 22nd to look at what we were talking about with coffee, and that same condition that we were talking about then is still underway with the support gap to the market. The third market that we're going to talk about is corn. So I'll click on corn and then come back over here to the deep dive and point out that it's at a tight support resistance level. And you're going to see that whenever we get a tight support resistance level, the same things we were basically talking about the market, where we're still long corn, we're still anticipating that something, an explosive move is going to take place. That whenever you have that tight SR, support resistance, that's where we would still see a condition where corn is in an explosive move, and it's in more explosive move than we were before. So when we were looking at this on the 19th, it was basically around this level. We were still talking about the tight consolidation. Well, that consolidation, even though there's been a rally to the downside, or surge to the downside, a rally to the upside, you'll see that it is still following the 50-day moving average, that yellow line, and it's still finding the floor to the market with the support and resistance levels, specifically support right through here. That the same condition, in fact, it's even a little tighter consolidation, still exists. And so, a good way to look at this, there's our energy level indicator, the green line, and whenever we're down back below the lower yellow level, that's where you know that you're in one of these really, really tight consolidations. So the same condition that we had back on the 19th is still underway. In fact, it's even stronger now, and the system is being long the market at the present time. We'd still be looking for an opportunity for the market to really start to rally one way or the other. Our bet with the systems is to the upside. So what I really want you to look at in this case is to keep us honest, look at the deep dives in the past, go back in time. And the way to do that is if you come to the website, you come down to our video blog, and just scroll down, and you'll see natural gas, coffee, and corn. These are the ones that I've been addressing here today, that the conditions either became verified with what it is that we are talking about, or the same condition is still underway. And in the case of corn, it is even stronger now, and we would expect some type of an explosive move. So that's the upshot of this is please review all of the different comments that we make in these deep dives so you get a better feel. Lean hogs as an example, just real quick. We talked about the breakout in lean hogs. I will pull that one up as well. In fact, let me just come back over here to the deep dive. And we just had, with today's action, as opposed to yesterday when we were talking about lean hogs, that we had a pivot high based upon the elastic level, but that resistance gap is still underway. So when you look at the chart, you'll see that the market broke out to the upside, and that's what we talked about yesterday, that it broke above the 200 day, and it was able to break above this particular level right through here. As is normally the case, anytime you have a really strong breakout to the market, one way or the other, break up or break down, in this case a break up, you'll often see that the next day it retraces, comes back to the support, whatever support level that it broke through, and then it goes on its merry way. So that's exactly what did take place with lean hogs yesterday, where it's come back down, it's finding support, and we'd be looking for the same conditions to hold true. So we're still long hogs, and we're still looking for an opportunity for the market to show us exactly what it wants to do. But there's no doubt that with the surge that we actually had over the last couple of days, it's not a surprise that we're seeing some type of a resistance, or at least in this case a pivot high having been created in our elastic level indicator. So again, I just wanted to point out a couple of quick markets. So anytime you look at the deep dive and you want to go back in time, do as I just talked about. Go to our video blog. Here's lean hogs from yesterday. You can scroll down and see what did we talk about with lumber or cotton with that consolidation, with the energy zone that we saw inside of interest rates, wheat, and then the three markets I just talked about. Always go back, check what it is that we were talking about, and we feel very comfortable that you're going to feel that the information that we're giving related to the technical perspective as to where the market is headed, and then what the systems are doing in accordance with that everything comes together here quite nicely. So that's why I wanted to point out in some detail, as I started off with natural gas, coffee and corn, and then obviously we just talked a little bit as an offshoot to that of lean hogs. So that's tonight's deep dive. We'll look at some more markets next week. I'm going to be doing a little bit of traveling, so that's why I wanted to rehash a couple of markets here. But we'll start another deep dive early part of next week. And until then, good luck with your trading, and we'll talk soon. Thanks.